Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And tonight we have a lot to talk about. The Federal Reserve rate cuts in September. Yes, it's going down more than likely. That's what we've been talking about for the last 2-3 months, week after week. We're waiting, we're anticipating that it's going to be in September. And then, of course, I dropped a video earlier today about condo hotels. That's right. We have to be on the lookout pre-construction wise and buying a condo hotel. You need to know the numbers. Don't let them fool you out here, because that is a whole different product than you owning your condo and you renting it out. There's two separate things. We'll get into that if you have questions. And also, the last part, financial survival starts now. And welcome to the SSN Nation Wealthy Wednesday night live stream with the icon. I hopefully is gonna be in the house. Only members of the channel can be on the live stream in the chat room tonight. Everybody else can watch. And welcome. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. Right, welcome back, ladies and gentlemen, and thank you so much. Tonight, I started this off about 20 minutes later. It wasn't at 8:50 p.m. It was at 9:10 p.m. tonight. So this won't be long, but it will be sweet. So once again, make sure you smash the like button. Make sure you let me know if you've received the notification and saw the trailer. And again, if you can't get in the chat room here on YouTube, there's a reason why. It's because only members of the channel can be in the chat room. So once again, thank you everybody for being here. Let me see who's in the house first. It looks like we have Jawway J. He's here. An investor is here. Welcome to the SSN Nation Wealthy Wednesday night live stream with that icon I humbly appreciate. And he says his tagline this evening: hello, SSN Nation. Hope everyone is doing well. Received notification, saw the trailer, and smashed the like button. He's done the trifecta, ladies and gentlemen, and give it that one piece, because you know the YouTube gods don't like us sharing this information. Why? Because when we start talking about simple things such as rate cuts, the Federal Reserve rate cuts, a lot of people talk about it. But the point of the matter is we go just a little bit deeper, because we start naming stocks. We start naming ETFs. In fact, why don't I just start off with the one that you should be going to, yieldmaxetfs.com. Let's just start right there. High risk, high reward. You want something that gets you 20, 25, 30, 35% or more on your money? It's possible, but it's high risk, high rewards. Just go check out yieldmaxetfs.com. It's pretty simple. All right, get your pen, pads, and papers ready, because you never know what's going to happen. I don't know everything. We have a lot of smart people in this chat room. Here's another one. Victor Marrero, another investor, is in the house as well. Welcome to the SSN Nation Wealthy Wednesday night live stream. He too has that icon I humbly appreciate. And the new retiree, who's going to also add to his resume of life, Mr. Worldwide. And he brings his tagline tonight: hello, all. And of course, let's do this. And I'm just going to do this straight up, because when we start talking about rate cuts, we get excited here. Everybody should get excited. That means a bull run, as we talked about it on the Money Making Monday live stream. That means corporations, people with money sitting on the sidelines, those people that have assets, they will be buying up the stock market. And the only way prices can go up in the stock market is somebody buys higher than what you previously sold it for. So as long as there's a bull run and they're buying up millions of dollars, that's how you get a bull run. That's simple. And that's what's about to happen. Victor Marrero, once again, thank you so much for being in the house, man. And also, the rate cuts coming in September. The reason why the stock market went positive pretty much for the day is because why else? It's pretty simple. If Jerome Powell says something regarding rate cuts, the market reacts. Here it is right here. Powell says September rate cut on the table. Come on, Powell. You know you gave me a call 6 months ago and you said, Eric, man, we're going to do the rate cut in 6-7 months. You know we're going to wait till it gets down to 3%, 2.8%, and then we're going to call it, we got it down to 2%, and then we're just going to start cutting the rates. Well, here we are. It was 3 point something last month. You're not going to wait till it gets down to 2%. Come on. Who are you kidding? You've held out long as you can do. That's it. In fact, well, as I told him on the phone, this is a parody. This is fun. I don't really talk to him. As I told him on the phone, yo, man, why are you helping the rich dudes all the time? Raise the damn interest rates. Come on. I want to see them do their fire sales because there's no way with their adjustable loans that they're going to be able to get that 7% return when their cap rates are freaking 3 or 4 or 5%. I want to see them start selling something. So then the ordinary citizens get to win. He just chuckled on the line. He said, ha, ha, ha. All right, Eric, that's a good joke, man. We ain't looking out for your sorry ass. We're looking out for the big boys that have the billions and millions and hundreds of thousands of dollars worth of net worth. That's who we looking out for. So tell your friends the only way they're going to join in the party is have good credit and make sure that when I drop the interest rates, they buy something early if they can, because assets are going to go up. There's no way around it, ladies and gentlemen. So here we are. Powell says September rate cut. This was today. Today. So what do you think happened today in the stock market? We'll show you shortly. Said Wednesday that the central bank could possibly lower its benchmark interest rate at its next meeting in September. There ain't no could. It's going to happen. Letting it stay at this level. In order to make the market go hot again, they have to reduce it, whether it's 0.5 percentage point, 1 percentage point, that starts the movement. All right. So don't fool yourselves out here. There's a lot of people. I have to admit, I've perused the internet and the YouTube sphere. And what do I see? I see a lot of people predicting a crash, which is, I'm shocked by this. I really am. There's nothing that would crash. Just because 70% of the population lives paycheck to paycheck, yeah, you might think there would be a crash. Just because there's all-time record high on the credit side, you might think there's a crash. Well, see, here's the thing. Defaulting on credit, you've already bought whatever it is. Defaulting on credit doesn't change anything. That's the weirdest thing, right? So if people didn't pay the over $1 trillion worth of credit card debt, what happens? Seriously, what happens? It's not like somebody comes to your front door and starts repossessing your stuff, right? Somebody's going to lose. Those people that's holding that derivative is going to lose because nobody's going to pay them, right? They're the ones that's going to lose, but whoever isn't holding the derivative, they got paid. So there's some form of money that's in the system. So they can live with a few millions if that occurred. So you have to think about this. This is why it's very, very interesting that I'm hearing a lot of people talking like this when there is no history of what they're saying. All right, here we go. Victor Marrero says, told you to buy, load up with NVIDIA when it went down to 113, 110, 109, 107, 103, 100. It even went down to the day after on Monday or that evening or that morning. Anyhow, it went down to 100. Did you buy NVIDIA then? My God, ladies and gentlemen, what were you waiting on? 2 days worth of 103, 102, 101, 106, 107. You had every opportunity in the world. What did you do? You don't want to be wealthy then. You know why? It takes chances. How many people want to take chances? Let's get real. How many people want to take chances with their money? It's back up to 117 already. A freaking 15%, 16% increase. If you would have just been paying attention on Friday and Saturday here in the SSN Nation, you would have been like right on par. 103, 105, 106. I mean, it was all down there. Just a 10% movement of $10. Most people would take that over the year if your stock moved up 10%. And a lot of people who have ETFs, that's what you take. 9%, 8%, 401ks, 8%, 7%, 9% annually, and you go, woohoo. But when a stock you can buy for 100, 101, 102, 103, knowing it's one of the biggest companies and the biggest AI space products in the world, you're sitting there going, like somebody said, I'm waiting till it goes to $90. I was like, you understand that it was $90 like 3-4 years ago? Not after a 10-to-1 split. It was literally $90 and went all the way up to roughly $1,200, $1,300. That's insane. In like 3 years, 4 years, 2,500% in 4 years. See, this is what I'm saying. There's people here that was in the SSN Nation that was buying AMD, NVIDIA, TSMC before their stock splits when they were $40, $50, $60, $70. So there's no time like the present, because a lot of people will say, oh, I missed out. No, you're still in the game. You haven't missed out. The job of the Federal Reserve is to help their buddies. The stock market's going to keep going up, even if there is a recession, even if that did occur, but they're doing everything in their hands that they cannot make. Byzantine Red is in the house. I see you. Thank you so much for being here, man. I appreciate it. Byzantine Red. Let me see. I missed something here. Told you to buy. Load up. The market came back. Hold on a second. I forgot something. I didn't finish the Victor Marrero, Mr. Retiree. I didn't finish up his Mr. Worldwide. Let's see. I didn't finish up his message. The market came back roaring today. Exactly. Fox Business News described his violent return. It was incredible. I could keep up with my option cover calls. Exactly. First of all, if we're going to keep talking about NVIDIA, there are some analysts that says it's going to be at 150, like by next year. If that's true, everybody who buys, well, even now at 117, if it goes to 150, you're damn near 30%. I mean, what are we talking about here? Is, as our man Gino Chimiente used to say, give me my 25, 30%, I'm selling. That's what he used to say. He said, I don't need the big wins. I just give me that 25 to 35, 30, 25 to 30%. Let me sell. I'll take it all day, every day. I'll buy back in later. That's all he cares about. 25 to 30%. Man makes a living doing it. Gave us some gems back in the day. So hopefully he's all right. Haven't seen him in about a year now, year and a half, but hopefully he's all right. Byzantine Red, welcome to the SSN Nation Wealthy Wednesday night live stream and no struggle. That's right. Yo, yo, yo. No struggle, but you know how you know struggle? Stop struggling now means you have to take action. You can't just sit on the sidelines and watch that parade go by, because this will be the last parade you're going to be able to participate in. Let's go. I was speaking with Mo earlier. I was doing a little research. I said, you know what? Let me go see what the Gen Z, what's their average wage right now? And I'm looking it up, and it says something like $71,000 per year. You guys don't understand. A 1-bedroom or 2-bedroom apartments are costing $2,000 per month. You at least have to make $72,000, $6,000 per month to afford that. A 1-bedroom luxury apartment. Come on. This isn't going to get any better. So therefore, you better be buying assets that pay you, whether it's a stock that goes up at 10, 20, 30, 100, 1,000%, or whether you buy dividends, or whether you do an alternative. It's very simple. We're sticking with the 3 basics. Stock market, real estate, buying a business like you're on Shark Tank. Not starting a business, buying a business. Why buying a business? Because that way you know you have profit. You know you have money coming in. And look who else is in the house this evening. We have Mr. Cool. He's in the house this evening. Thank you so much for being here in the SSN Nation Wealthy Wednesday night live stream. And he has that icon next to his name, which I humbly appreciate. And he brings his tagline this evening, another investor. Hello, SSN Nation. I hope everyone is doing well. I received a notification and saw the trailer. Thank you so much for that. And smash that like button. I hope that would be greatly appreciated. All right, let's go. Actually, thank you. Somebody's about to put some things down. Is now at 120. Oh, look at this. At the overnight trading. It's ready to launch. It's already. That gave people an opportunity. Let's call it what it is. A week ago, the video came out, said NVIDIA is going to make you rich. The Fed is going to make you rich. This is how. Because you could have bought it the 103, the 102, the 101. And now it's at 20% in less than 24 hours. Now, a lot of you would say, well, I'm not selling. I agree with that. Why sell? You're on a rocket ship. Why not wait for 3-4 years and find out where this all shakes out with AI? Because if this goes back up to $1,000 per share, you're sitting pretty. And the fact they only give 1% dividend every year, that's not anything to write home about. But if you have enough shares, it'll be something to write home about. So again, opportunity is here, ladies and gentlemen. Your financial survival guide is here in the house. I will get back into some other things here shortly. We're going to go look at the Jerome Powell situation. All right, here we go. Recent economic data has pointed toward inflation data falling back toward the central bank's 2% target. I told you, while the unemployment rates has crept up above 4%. So, yeah, this right here is bogus. There's no way it's going to get down to 2%, maybe 2.4, 2.7, 2.8, but never 2.1, 2.2. That's not going to happen. All right. They pretty much, they took advantage. And they cannot hold out any longer. If they go past September, I'm going to be shocked. I don't think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market. Powell said exactly. See, these guys are not stupid. All right. You guys have been led down the path most of the time, except our foray into crypto. Most of the time, you've always had the staples at your disposal. You've had the stocks, you've had the real estate, and you've had the businesses. Those are the three things you need to build wealth in a shorter time frame. So I'm not going to go into this too much further. I will leave this link down below so you can check it out. But I want to go see what the markets were today. Why not? Are they green? Are they red? What are they? After hours, what are they? Looks like some red's happening because if it moved another $3, that's almost like another 2%. So that's pretty interesting. All right. I'll leave this up for the time being. Maybe it'll get to it. Yeah, this looks awfully slow. I'm putting a link to that Jerome Powell article that came out. People can read it. There's no reason not to pay attention to that. The Condo hotels, if you saw the video that I dropped earlier today, let me know what you thought about that very interesting subject matter. The reason why I say this is very interesting subject matter is if you're running a business and all of a sudden, look here, all green today. All green. S&P 500 green. Dow Jones green. NASDAQ green. All green. After hours green. Oil at around $80. Okay. Everything's looking like 2,500 for gold. Everything's looking pretty good. Unemployment at a measly, 4% isn't really measly, but it's still a good number at 4%. So now is the time, Jerome Powell. Release the dogs. All right. Might as well. Why wait till September? Why wait? Get it started in August. It's going to be one hell of a WhatsApp group, SSN Nation and Lifestyle. That would be greatly appreciated if you actually, because only members with the icon can be in the chat room this evening and every Wednesday. Members of the icon can look under the community tab and join me on screen and discuss anything. Or if you're camera shy, hell, you don't have to show yourself on screen. Just turn your camera off. It'll put an emoji in your place for you here on StreamYard. But the link is only under the community tab for members of the channel. And if you're trying to get into the chat room tonight, please, that's not how it works. All right. Now, this will be our last night that we're probably going to do every live stream on Instagram. There hasn't been any warm reception to it, other than we do have a couple of people. Joel Nolasco, Omar the Creative is here on Instagram. Thank you so much, man. Very, very nice to see you guys in the chat room, and I appreciate your support. Make sure you smash all like buttons, no matter if you're on any podcast platform, any social media platform where you can hear the sound of my voice. Please hit the follow, the like, the heart, whatever that platform's emoji is, to show your support. That'd be greatly appreciated. We're going to come back out of the doldrums. All right. So hold on a second. There's something I'm looking for. Why is that there? Interesting. Oh, okay. There we go. I hit something I wasn't supposed to hit once again on. Now, let's get into, well, where am I at here? I'm on the wrong thing. Here we go. All right, ladies and gentlemen, let's get into it. Anybody have anything else they want to say before we get into this next little segment? Because we're talking about the condo hotels. I dropped a video today. I didn't even need the Condo Hotel Center. Is that what it was called? I think it was called Condo Hotel Center. And there's a lot of projects, and I'm going to stick with pre-construction, and I'm going to stick with anywhere in the world. Thailand's doing this. Mexico's doing it. United States has been doing it. The Caribbean islands, they're doing pretty much everybody in the world. Why would somebody, okay, there's two sides of the coin. I'm going to go from the side of the builder. So why would I bring out a condominium project which requires me to sell the unit or have, real estate agents or brokers sell it? I have to sell units, and after I sell units, I have to go get the permits. I have to go get the land. I got to make sure I have everything paid for. And while they're making their monthly payments over potentially 2 to 3 years, I somehow have to build and spend money on materials, right? So now that's money out of my pocket. Then build it, I'm out of the loop pretty much, other than I can be on board with HOA. But as far as everything else, if the person's allowed to rent their own units, I'm out of that loop. There's no money tree for me on that one. If I do, I'm not going to be HOA, so I don't have a money tree on that one. So now I don't make any more money other than the time, the difference between my build costs and how much they pay. So when things happen, when prices start going up, things happen. People start pulling back on buying, because I'm sitting here right now. I can go to Zillow. Anybody in the world can go to Zillow. You can put in parameters such as $100,000 to $200,000 for homes, and you can find that in America. Now, will it be in a place that you like? Well, guess what? Yes, you may be 30 minutes from downtown of a major city, but does that really matter if you're by a lake or some other touristy attraction? It doesn't. So as a developer, as cost to build rise, what's my next play after that? So then I even make more money. My next play after that would be condo hotel. Why? Because now you're building me the condo hotel unit, and at the same time, I still maintain potentially the management and part of the HOA. And since I maintain management and I decide to be a condo hotel, now I get your whatever I want to make up, 35%, 40, 50% of rental income that comes in, we split. Then it turns into the next pet peeve I have. Is it a pool rental or is this just a rental for each unit? A lot of these companies, they're going to pool it because there is no 100% occupancy unless there's an event or a holiday. But that's only going to be for a few days. It's not like it's going to be 100% for a week or 2 or 3. All right, that's rare. So my point is, you're going to have to end up thinking in your head as a buyer, what am I going to do with it? And I want to be able to tax you for the rentals, the HOA, anything else that comes in between. Because now, after I build it, I have money coming in for life. Especially if I control boards or if I control anything where the owners can't do anything and you have to rent through me, the management company. This is what we're talking about, ladies and gentlemen. There's more advantages to the developer than it is to the buyer. And again, if anybody's interested in condo hotels, and I highly suggest that you study. Because for me, I've never seen a condo hotel do 15, 20% annual returns. More like 5, 6, 7 if you're lucky. Now, when we start talking about differences, when we talk condo hotels, there's only differences like this. Amenities that a person doesn't have to leave. Not just a condo, not just a hotel, not just a pool, not just a fitness center. But you have actual restaurants. You actually have water skiing or lazy rivers. You got mini marts. You got a lot of stuff. Now, all of a sudden, that changes the whole game. Because now the people don't have to leave. Whatever monies they were going to spend to go somewhere else, they're spending here. That value increases your rental property. And it also helps with your occupancy rate. This is why I highly suggest that you never buy a pool, a fitness center, and that's it, as a condominium or a townhouse even, or in a villa project even, because you have to leave to do everything, right? Everything. If you're not in some project that has a lot of amenities. And nobody on vacation really wants to get in a car or rent a car in a foreign country and sit there and say, you know what, let me go 3 miles, 5 miles to go around. Yeah, okay. Some people feel comfortable. A lot of people don't. So that's why all-inclusive resorts have a higher occupancy rate than condo hotels. People are willing to spend $800 per night because they don't have to leave. They feel safe in those gated communities. And there's a lot of attractions inside. That should be your first clue as an investor. Victor Marrero just came back from, not just, but a few months ago, he came back from Punta Cana. At the Hard Rock Hotel, he was like, it was 90-some% occupancy in June. I think it was June. 90%, whether it was July, it doesn't matter. June or July, 90-some%. Oh, I think it was 95 to 98%, something like that. In June or July, a condo hotel will never be that. Not just some random summer in Dominican Republic. No condo project right now is not going to do nowhere near 90% in the summertime. And because there is no real mega projects. The mega projects are going to be built in the next 3 years, at least some of the first phases, and some of them are but that is what you have to think about. So now, why would you spend premium dollars on condo hotels. If somebody came to you and said, hey, I have a 1 bedroom, fully furnished, and it's 200,000 and it's a condo hotel, then why are you going to buy it unless they have a hell of a lot of amenities there? All right. Because your rental rate is going to be shared in a pool. Some don't, but most of the time they will. And you really need to know that rate. Again, I emphasize there are some condo hotels that literally take 50%. You heard me correctly. They could be charging $250 per night, $300 per night. You get $150. Do you understand what we're talking about here? This is $300 per night for 7 nights is $2,100 gross. And all you're going to get is $1,050 for 7 nights. Some people would say, Eric, that's good, but here's the problem. How much did you have to buy that unit for to get $300 per night? You think you bought a place that's $100,000? Unlikely. Highly unlikely. How about 200,000? Well, I can tell you this right now. In the Dominican Republic, they're off the charts because these condo hotels are not inexpensive. All right. So just keep this in mind. Are you going to buy a condo hotel for $250, $300, $350? That means 1% is what your target is in SSN Nation lingo. 1% is what if I buy something for $250,000, I want to be able to get $250 a night. That's just the rule, so I can stay in this 12 to 15% range. But unfortunately, if you decide to buy a condo hotel, you're not going to be in that range because your dollar cost every month for maintenance and expenses are going to be near 50%. They're going to charge you 30 to 35% for management, but what happens next? Is there going to be a reserve clause like Platinum in Las Vegas that's a condo hotel where they say you have an HOA, true, but when you rent, we take an extra like 10 or 20% to put into future. How about that? All kind of crazy stuff happens. That's why you're at the mercy of the condo hotel because you don't own it outright. And there's one very important thing that's not spoken enough. When you're buying condo hotels, just keep in mind, you need to go talk to banks. You need to seriously go talk to banks because you're going to call it a vacation rental property. Then you're going to find out that you can only stay in it 60, 30, 60, 90 days a year, which actually forget the 90. It's rare that it's 90 days. You're not going to be able to live in it. So if you're not living in it, what does the bank classify this as? Or if you're not renting it out as vacation, as a second home, what are they going to classify that when a hotel, a condo, a Sheraton, a Hilton, a Marriott is renting it for me and nobody lives there? That's what I want to know, especially on the island. If we're in the USA, it's already happened, but not all banks will give you loans. So keep that in mind. All right. I'm just saying these are the type of things that they don't talk about, but we talk about it here. Now, because there's a couple of things that started happening. Oasis Lake, Condo. All of a sudden, they come back and said, hey, wait, we might have Wyndham. I was like, Wyndham who? Wyndham what? Wyndham Management? Wait, if it's Wyndham Management, these guys like to control everything because that means they get the HOA, they get that on a fee. The nightly rental rates, you're probably, like I said, you're probably going to be at some stupid number like 30, 35, 40% is what, or maybe even 50. I don't know their latest stuff. All I know is they're treacherous to me. All right. I'm just letting people know. I have nothing good to say about their management practices. They'll let properties run down past its expiration where you can walk in and see clearly that things need to be refurbished. They'll wait an extra 2 years before they want to spend the extra mills. Meanwhile, they're soaking people by saying, oh, yeah, well, your unit, yeah, we had 98% occupancy for the month, but what can I say? Your unit only rented out 60% of the time. I mean, they got shenanigans. So all I'm saying is you got to be very careful if you're going to delve into this world of condo hotel. Victor Marrero says are a nightmare. Even those in Orlando have a ridiculous monthly management fee plus limitations on when you can use your unit. Exactly. Those are the keys right there. Limitations on using your unit. So here's your limitation. Hey, I want to use my unit January 10th through the 17th. Sorry, Mr. Bird, we already booked that up. But no worries. Everybody has the same furniture package. Instead of you being in your unit 305, we're going to put you. Is it all right if we put you on the fourth floor in unit 407? It's the same unit. And you're going to be like, damn, I don't own this, right? I forgot. Yeah, that's right. It's the same furniture, same thing. Everybody has the same stuff. Nah, yeah, you can put me in 407. It doesn't really matter. As long as I got my same type view, we're good. Yes, Mr. Bird, you're good. How about the sickening part? Here's Vegas for you. In some of these places in Vegas, Victor Marrero and everybody else, can you believe this? Right, this is what he's saying right here. Even those in Orlando have ridiculous monthly management fee plus limitations on when you can use your unit. Their management fee is like 55% of the rent. Crazy. Oh, see, Victor Marrero's, I had to spoil everything and go over 50%. He's not lying, ladies and gentlemen. You're under their control. You have no control. It's not like you can just, hey, management company, I need to talk with you guys today here. Hey, you know what? I want to pull out you guys managing this for me because you're killing me. I want to get somebody else. You know the answer? No, hell no. Sorry. Too bad. So sad. That's how they're making their money. And you're helping maintain the whole condo hotel. They might own, Wyndham does this a lot, they'll buy into the project. So they'll have 10, 20, 30, 40 units themselves. So guess whose units they're going to rent first? Theirs. And then you're getting paperwork saying, oh, yeah, it's a pool membership thing. Yeah, we're going to, and then it's basically you have to take them at their word most of the time. Unless you're going to be active when they have the HOA meetings. It's no joke out here. And Victor Marrero, I wasn't going to spring on them, but you did spring it 55%. But how about this little trick right here, ladies and gentlemen? Las Vegas. They have condo hotels that do this trick. Remember my example where I said, hey, I'm calling up. I'll be there January 10th to the 17th. And I would like to stay, in my unit. Imagine your HOAs being, well, I'll use Vegas HOAs. Imagine you have a 2-bedroom, 1,500 square foot condo in city center, and it costs you $1,200 a month HOAs. All right. You heard me. You can go look it up. You can Google. You'll see. How much do these things cost? Oh, you can buy one for $195, $210, $220, $230, $240, of course. Because you're already paying freaking $1,200 a month or $1,100 a month in HOA fees. But here's the kicker. I want to stay there January 10th through the 17th. Okay, Mr. Bird, you're available. You get there. Remember when I said your maintenance fees, let's just call it $1,200? They make you pay more when you actually stay there. They penalize you in a few projects, not all, but in a few. So this is their other tactic. They're making money hand over fist. Guess who the customer is? It's not the guys that are doing their rentals for vacation. You are the customer because you pay the HOA. You split the fee with them having what risk? None. You paid for the unit. What's their risk? None. So this is why condo hotels, I should have talked about this a long time ago because we talked about condos and pre-construction condos, townhouses, and villas. But condo hotels, Palace Suites, all these guys, there's probably others. Chuckham, Paradise Towers 2 is supposed to be a condo hotel. When they start doing things like this, that's so they can maintain you as the customer will always be a customer, whoever owns there. because all they have to do is have an HOA meeting and say, hey, man, all the prices, inflation and all, everything goes up 5%. Whether it does or doesn't, that's profit in their pockets. You don't think a corporation is going to actually try to lose money, do you? They're going to take full advantage of you. All right. So hopefully there's no misunderstanding what you're getting yourself into. So when people say, yeah, I got the single one, I got the Palace Suites for $100. I mean, sorry, $100,000, 99,000 or 105 or 110. Great. But you ain't going to like what's about to happen, because unless they can get the price to a crazy number like $200 per night, which could be possible, I guess. I wouldn't hold my breath on it. But let's just say you were able to get to $200 per night. Now the question is, what's the occupancy rate? If it's 50%, okay, that's great. That's 15 nights. That's 3 G's a week. But if they come back to you and say, hey, after the expenses, the management fee of 35%, the electric, the MasterCard, the Amex or Visa little transactional charges, the water bill, oh my, you don't get $3,000. You get like $1,450 for the month. And then you're like, wait a minute, I have HOAs. How much is my HOA? Oh, well, you only pay $150. Great. So I have some profits left over. That's the only way this works. All right. That's the only way it works, which will be good if that was actually be able to be maintained, right? If you're able to have, but here again, what happens when you check with that condo hotel? What happens for all the units you don't rent out? Do they share in a rental pool? So here we are again, 60%, 50% of the units in the building are rented out for that week. So we got 1,450, but now 50% means we're down to 700 because we're splitting it amongst everybody. See how fast this goes, see how this works. And then your following month, you're paying your HOAs again. So again, just keep all this in mind. It's real crazy. It's ridiculous. It's so ridiculous. It sounds good, set it and forget it. But traditionally, I told people before, it's 6%. I don't get it. 4, 5, 6% condo hotel return on investment. I don't get it. That's not even worth getting out of bed for. Just go down and get a treasury bill. I mean, like I said on Monday, go get a JEPI, JEPI ETF, JEPQ ETF. ET is the energy transfer, energy company, 8%. I mean, why are you messing around with 5, 6, 7%? Or unknown, because when you do pre-construction, it's really unknown. You don't really know what's going to happen if all you have is a condo hotel and you have a few amenities. And the best amenities that's going to be into a condo hotel is going to be Chuckham inside Vista Cana, Oasis Lake, depending on, it's not formed yet, but it looks like to me it's going to be condo hotel. Oasis Lake has all those amenities in Caribbean Lake Park. That changes the game, makes, in theory, because I always go theoretical because we have no way to confirm because nothing exists like this. But I do have something to compare it to. Everybody knows Las Vegas. Everybody knows by now that there's a place called City Center. And I hope you guys understand. I've talked about it before. Cosmopolitan, Vidara, a lot of those places are condo hotels. So all you have to do is do their lineage and go look and see how much people have to pay for HOAs, see what their rental rates are, and then see how much they're selling units for. Because originally you would think if there's pools, like I'll use Cosmopolitan because I love their pool area. You have a pool area that has pool tables, ping pong, widescreen TVs, bars, restaurant, all on the side where the strip is, the strip lounge, right? And more, news, entertainment, all of that in this big, nice space. All right. But how much is it going to cost you? So you would think it's Vegas. You're thinking, okay, a hotel room in Vegas is something a night now because of the resort fees. And especially during like a main event or any type of event, prices escalate for that temporary time. But what happens when it's not really anything in the city? There's always something, but you know what I'm trying to say. It's not bringing in like 200,000 people this weekend for a fight or something, right? So what happens? That's the question. So when you start looking around and you realize their maintenance fees, and then you understand they have HOAs. Oh, I should have mentioned this. The HOA is 1,200, right? In some of these condos, yeah, you can buy them right now for 200 G's, 225, 235, 250. You can get yourself a 2-bedroom condo at City Center, whether Vidara, Cosmopolitan, or I can't remember the other ones. And some people would say that's a great location. Well, it is, but once you realize what you're getting in return after you spent that money, it's kind of like, am I going to get $20,000 a year back from this? Highly unlikely. More like 10 to 15,000. They don't do 100% occupancy or 90 or 80. So that's why the prices are not escalated for those properties. They've for 20 years. 20 years ago in the early 2000s, Cosmopolitan, that was about 100, and I think it was 140, something like that, 150. 20 years ago, damn near. So you would think the high prices 20% year over year in 2020, 2021, and all the other upticks after the crash, you would think these things would be like 400 G's, 500 G's. All of them, not just one or two, all of them, right? These 2 bedrooms, let's say. One bedrooms was roughly, I think, in the mid ones. And I don't even know if Cosmopolitan has 2 bedrooms. I'm pretty sure they do. But I'm just using an example. We'll just go to Vidara, which has 2 bedrooms. All right. And 1 bedrooms. Can you believe you can buy a 2-bedroom Vidara condo, roughly 1,300, 1,400 square feet for like 250,000? Again, it's a condo hotel. And again, if you're going to be in a condo hotel, then you're not going to live there. So now you have to very well know, I need to see paperwork. What was the return on investment this year? And they're going to say 5%, 6%. And you're going to be like, well, why am I buying this then? That doesn't even make any sense. I can go to the stock market and be liquid and not have to deal with selling the property to get my money out or deal with any of this. I can just go to UMAX ETFs. I can go get a real estate investment trust, ORC, which paid out, 93 cents per share this past, just a few days ago. That's right. I think it was 93. I don't think it was. It was probably, no, I don't think it was 93. That must have been something else. Because I think they're not that high. I think it's like 18, 19 cents or something like that. But nonetheless, but the return is 15, 16, 17%. And we're still liquid because all we have to do is sell the stock and then download the money. So again, that's why I made the video about the condo hotels. If anybody else wants to talk about it, then do so. Because your financial survival is going to matter. Your investments over the next 2 years, it's going to matter greatly. You don't want to lock yourself into anything that's single digits if you can avoid it. What I'm trying to say is, if you can lock in 8%, 9%, 10%, and you feel relatively safe, that's what you should do. But there's no way on this planet you should be thinking, I'm going to lock in 6, 7% or less. All right. You should not be thinking like that as an individual person, an OC, an ordinary citizen like us. You can't do that. Inflation numbers aren't true. Just because Jerome Powell says 2% and we're going to cut rates, that's not true. That's not how our system works right now. Our system works on a whole different dynamic. It's not based on capitalism rules. It's based on how much money is the person willing to pay. And because You live in a system where everything's at a grocery store and most people don't fend for themselves, then you're going to continue to pay. Even if they just jack the price up, you're still like, okay, I'm still going to buy it because this is like the only thing here. And the other price point for the matching product, it's only $1.50 less. So I might as well just buy this one that I normally buy. That's what we're in right now. And until people actually legitimately run out of money and have no credit, then that's when the game changes. That's when shrinkflation gets even worse. They're going to shrink the packaging. Then they're going to turn around and charge you the same or a little bit more. They've already done it. That's their MO. So this is why you need a business. You need an asset that pays you. So then this way, you don't have to worry about anything. All right? Because you're going to use that money to pay it. All right, Instagram, I see you. All right. Fracida, thank you so much for joining. Make sure everybody on Instagram smash that like button. You're part of the Wealthy Wednesday night live stream here. We're talking about condo hotels. It doesn't matter where you are. It does not matter. In fact, since we don't have anybody having or anything, here's what I'm going to do. I'm just going to go do this. I'm going to go do condo hotel. Condo hotels in Las Vegas for sale. And these aren't pre-construction, right? Just keep that in mind. Pre-construction means you have to ask questions. All right? You have to ask big time questions. Let me see here. Nobody's touting condo. Here we go. Las Vegas Homes by Leslie. Let's just get a random person here. A random realtor, not affiliated with. Go to the home of Mr. Cole, Mr. and Mrs. Cole. And that's right. Say hello to Mrs. Cole. Hopefully everything's going well. Let's go see what we have here. Las Vegas condos for sale. I'm not recommending this person. I just pulled it off of the internet. All right. Here we go. Lowest listing, 172. Highest, 207. Here we go. Look at this. Luxury condo hotels, 100,000 to 200,000. Are you curious? Are you curious, ladies and gentlemen? I think somebody's going to be curious. One bedroom, 195. One bedroom, 195. It's a high rise in Henderson. One bedroom, 195. One bedrooms. Okay, I don't see anything happening here. These are all one bedrooms, and the ones. How much do you think these cost brand new? I would almost guarantee they were more than 100,000. And I'm not familiar with these properties that they show here because, wait, this looks like Lake Las Vegas, quite frankly. 187 for 450 square feet. Interesting. All right, let's go up to the 200s. Here we go. One bedrooms, 299s. Where's the two bedrooms? I don't see any. What's happening here? High to low. Okay, well, that's not going to help us. We're going high to low on this. We're at 300,000 buying condos. Again, once you get to 300,000, you pretty much that's ridiculous. That's really ridiculous because now you have HOAs. You could go out and buy a house for this, but I'm just saying. All right, we're at 300,000 still with one bedrooms from this. Oh, I see what's happening. Never mind. This is IDX. Hold on. This is why. That's why. This isn't even actually what we're looking for. This is just homes. I'm looking for the condo hotels. Come on now. Condo mania. Here we go. Let's see. Are they all doing the IDX? I should have put this in the video yesterday. 249 to 3 mil. All right. 298. Palms Place, 249. Trump Towers, 250. Starting points, those are probably one bedrooms. Here's Platinum that I was talking about earlier. Even though it says 270, I know for a fact there's some things at Platinum. There's Vidara. Those must be the penthouse. There's some over at Platinum for under 250. Some of my friends live there. And it's actually by it's on Charleston. It's not even in the best location, but you know, it is what it is. All right, so I can't show anything that I wanted to show. I want to get to some listings, but nobody wants to get into the condo hotels. They want to just do the condos. All right, Sherry's not going to cut it. Condo hotels by Leslie, not going to cut it. Realty Group, Luxury Realty Group. Let's see what they got to say. All right, so let's go. E. White, welcome to the SSN Nation Wealthy Wednesday night live stream with that icon next to your name, which I humbly appreciate. Another superstar real estate investors in the house. Not one property, not two properties, not three properties. He's Superman up in here, ladies and gentlemen. He's out here doing the damn thing. He says, I want $1 million worth of real estate. Those are assets that I'm going to turn into using to buy more assets. So once again, Victor, thanks for the inside advice for the condo hotels. That's a valuable piece of information. What's up, Eric? You know, man, we sitting here in the lab making things happen. And SSN family, don't forget to hit that like button. That's right. Thank you so much for mentioning that, E. White. That's what we have to do. So again, here's the things you need to take away, because E. White references what Victor Marrero has said. He says this: our nightmares, even those in Orlando, have a ridiculous monthly management fee plus limitations on when you can use your unit. All of that is factual. Their management fee is like 55% of the rent. Crazy. He said that succinctly. 3 things that he touched upon. And the worst part about all this is the monthly management fee, which is our HOAs. Imagine when you first bought the place, your HOAs were like $300. And then all of a sudden, 5 years later, they're $1,000 per month. And imagine originally it was 40% management fee for rental, and now it's 55 or 60% per month. You are the customer. So again, I don't recommend doing condo hotels. I got to be quite frankly. The only way I recommend them is if you have a situation, you have to be in a place like Cruise on Land, Larimer's, Oasis Lake. You have to have amenities. Vista Cana, you have to have amenities. You cannot just have a pool, a fitness center, and call it a day and think you're going to be good. Because right now there's people in Orlando that's living through this 55% management fees, and they still have HOAs to pay that have skyrocketed because our insurance costs skyrocketed for the complex. So all that comes into play. And now, does anybody want to take it off your hands? Seriously, are you going to seriously be able to sell something for $300,000 and then tell them, oh yeah, you're going to make $10,000 to $15,000 per year profit? That's not so exciting. Victor Marrero will tell you that ain't exciting, because he wouldn't have bought his Margaritaville thing if he thought Margaritaville was going to give him 5%, 6% returns, 10 G's to 15 G's annually, spending 300 G's. That's a travesty. I'm just saying, it's a travesty. I mean, it's a travesty. That's all I can say. You should be making a lot more than that, especially if you buy right. All right, so I won't go more into that because, I don't want to be here all night, because we can keep talking about it, because those are the 3 daggers straight out the box that Victor Marrero started talking about. And you have to understand, they can escalate. They're not in stone. Depends on year to year. When they have board meetings, they're for a reason. They may say, hey, we have a shortfall here. In fact, we just got a $10,000 increase in our insurance. That has to be covered by all the owners. Or some plumbing issue happened in the building. Who's going to cover that? You know who. You. And that pretty much goes for all condo complexes. That's why buying older complexes is higher risk than buying new complexes. If you're going to buy a condo hotel, I would say make sure it goes from 0 to 10 years. Because 0 to 10 years, you need to bail out, in my opinion. because now whatever you sell it at, whatever profits you're getting and your percentage, it's going to go down because you're going to sell for higher. So somebody else buying it saying, I'm going to take 6% or 5% because I just want to return and all that, that's the person you're going to have to find. And there's a lot less of those people. I'm going to tell you that right now. All right. Here we go. For a short-term rental to work, it has to have the right amenities, close to attractions, not tied to high management fees, and for you to have no usage limitations. It's a very competitive business, exactly. And it's getting more and more competitive with these condo hotels that are coming out. And I myself, again, this is why I always said amenities, 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 because you can't trump you can't trump anything at that point. So if I have, like I said, what are the ones? We got Oasis Lake, that's a Caribbean Lake Park that has all kind of things, zip lines, wakeboards, water skiing by a pulley. You got 3 lakes, 4 lakes actually that you can jump on. I mean, all kind of stuff. You need all that. And if you're trying to maintain a nice nightly rental rate, or you can be like the surrounding Palace Suites, who originally it was $99,000 for their little suites, right? 400 square feet, I believe they were. Fine. But are they really going to do $100 per night or $150 per night? And once everything shakes out, you get to collect $75 per night, maybe, or who knows, depending on their, again, the fourth component. Is this a pool rental or is this my unit rental? Because either way, you're not going to be guaranteed any 90% rental nights. 90% of the month rentals, you're not going to rent 27 nights. You would have to have like Mardi Gras. You would have to have like special high-end events every week to get somebody to stay for a week, even though in Punta Cana that we're talking about, it's 6.5 nights are rented on average right now when people stay there. So that's a good number, but that's because they're staying in the all-inclusive majority of them. So that's where they kind of get these high numbers. But how many people are staying in condos? What's that length of time, like Airbnb, VRBO? Those are the things you need to worry about. So if you want to be in the real estate game, it's not just simply what you used to be able to do like 3, 4, 5 years back where you could buy something and you're good. Now you have to understand who you're buying it from and what they're doing. Because I'm going to say Oasis Lake came out. I thought they were studio condos. All right. Where you could actually live in because the units are so big. I mean, when you start talking about 600 square feet, 700 square feet, 900 square feet, or 1,000 square feet for studios, those are large. So I thought people were going to be able to live there long term. And then as things kind of started developing, which I don't know if they finalized it, I warned them against doing that. But nonetheless, I'm not the boss. If they do Wyndham or whoever, Marriott, Hilton, Sheraton, whatever, and they're doing condo hotel concept, that changes everything. Not only can you not live there, you can't even stay there past either 30 to 60 days. So it's not a thing unless you're just going to be like, I'll just take the 8% or 7% or 6% or 5%, whatever I get, and call it a day. But again, why would you pay all that money for a 5%, 6% return when you could just go buy a stock, ORC that I just mentioned, ARR, AGNC, right? These are all dividend stocks where you can get double-digit returns, 10 or 11, 12% for the next however long they're giving out this return. As long as you don't reinvest after the stock price goes up, you're still going to be getting your 13, 14, 15, 17% interest or dividend rate, return on investment. So again, this is what we're talking about. All right. Let's see. I went over it again for Victor Marrero. I'll say this again. I'll reiterate. For a short-term rental to work, it has to have the right amenities, 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 amenities. Close to attractions, that helps too. Location, location, location. Not tied to high management fees. That's what we need to know when we deal with pre-construction. Don't play around. Now, in my video, I talked about cruise on land. Cruise on land is no better because they have components of one building is going to be rental only from their management company. So to me, you don't have to call it a condo hotel, but it kind of is, because if I want to stay there, I can't. They have rules, either 30 to 60 days at, and I might stay in a different unit because you have to have a fully furnished unit. But there is one thing, they allow you to rent on your own if you're in one of the buildings that doesn't have all fully furnished units. That makes things a little interesting. If they're still going to allow it, I don't know. But that what makes it interesting, because you might think in your head, I'm going to furnish mine better than theirs. I'm going to make mine awesome. But then they hamstring you. They said you can't charge more than 10% or less than 10% than what we're charging. So whatever their daily rate is, let's just call it $200 a night. Now you can go up to 220 and only can go down to 180. And so now you're restricted. Whereas me personally, you guys know how I feel about this. I'm thinking, Radel Cabezas, another real estate investors in the house. Welcome to the SSN Nation Wealthy Wednesday night live stream with that icon I humbly appreciate. And he says, I bought a condo hotel at the Beach City Place. Okay, he's talking about the beach, because the actual name really is the Beach at City Place. Yes, that's the one with the lagoon, ladies and gentlemen. And I was asking him in the chat room, which I still don't know the answer to this, because he says he bought a condo hotel. Well, here's the thing. There was going to be a hotel at the beach. This is a man-made lagoon in downtown Punta Cana, Dominican Republic. But because of this length of time, there's no way a hotel chain is going to wait 4 or 5 years, right? So that went bye-bye. So then apparently they built these condo hotels that I thought they were going to manage in-house. And there's some rumors, I haven't checked the latest stuff, but there was rumors that they were actually going to brand it, turn it into a real condo hotel, which I was like, oh, that's different. Okay, so now Palmeiras is actually condo hotel. And we don't even know who the flagship's going to be, or maybe they do. But now the questions start going. By the way, Radel Cabezas, how much did you buy your condo hotel for? Wasn't it like 99 or 89,000 like 3 years ago? Let me know. 3-4 years ago. Let me know. Okay. Condo hotels normally come with furniture. That's correct. Typically part of the purchase. That's right. You're basically buying a hotel unit. Yep. My Margaritaville home is also treated as a hotel, but I own it and can use anytime. Exactly. That's a huge difference. And see, again, upscale luxury. If you're going to do condo hotels, then you better do upscale luxury. I always recommend this with plenty of amenities. That's what Margaritaville is. They use Ethan Allen furniture. Yeah, you pay a premium, but hey, at least it lasts 5 to 7 years, even with a high occupancy rate. So you have to keep these things in mind. It's all in your perspective or your investment purview. Whatever you plan on doing, you have to make it fit you. It can't fit me, can't fit Victor Marrero or anybody else. E. White, nobody else. Radel Cabezas, it has to meet what your requirements are and what you're looking for. Maybe you will say, hey, Eric, I am only looking for 5 or 6% return. But here's the thing. You can never hang in the place more than 30 to 60 days. It's not like you can just go, you know what? I think this year, why don't I just hang out over here for like 3, 5, 6 months or whenever I want to leave? You can't do that. So you're eternally in the loop. That all it is just like a hotel visit. That's all it really is. And you're paying to buy the hotel a unit instead of the hotel paying to build their unit. That's really what you're doing. So I'm not mad at them. A great way to do things if you have enough people to buy. But people are going to start Googling condo hotels because if they have to build these condo villas and townhomes at today's rates, meaning price per square meter, price per square foot, and the material costs keep rising, there's just no way to know 8, 6, 9 months from now what the material cost is going to be. Who takes the risk? The developer. All he does is send you a contract saying if the ICDV rises 3% or more, then you're going to pay the difference. That's most contracts. The latest contracts, one just said whatever the ICDV says, that's what you got to pay. Like this year, it's 3.99% right now. Imagine buying something for 100,000, thinking that's what it is, and then you find out, hey, a year went by, it was 4%. Now you got to pay us an additional 4%. And in the second year, what if it's 5%? Now you paid another 5%. Okay, fine. You paid 109,000 instead of 100. But in the overall scheme of things, that's profit stolen from you for your rentals, because you're trying to rent at the highest price possible and buy at the lowest price possible. All right. Let's see here. Riddell Cabezas. Let's see. What's he have? I heard they're looking to get a big hotel chain to take over. Yes, I paid $88K. Yep. There we go. Back in the day. So the question is what we've been saying here for the condo hotel crowd. Financial survival is critical. At 88,000, he's going to do fine. Why can I predict that? Because he has a lagoon. Just the mere optics of the place is so beautiful. Even though it doesn't have all the amenities and all the stuff like a super resort would have, as soon as you walk in there, it looks awesome. It's beautiful. Do you think he's not going to be able to get $100 per night? I mean, seriously. And he's going to be downtown. Of course, he'll get probably more than that, quite frankly. If the hotel, what is the hotel? Is it AC Hotel? The Marriott brand is downtown, and they can get $134 to $150 plus the 18% tax, making it $180 to $200 per night for a hotel room. Yes, they do have breakfast. That's all inclusive. That's included. But if they can get $200 a night, and all they have is a pool, a fitness center, and conference rooms or whatever, I mean, the beach has a big-ass lagoon. And I don't know about the fitness center and all that, but I'm pretty sure there will be. But the point I'm trying to make is if you can buy at 88,000, 89,000, that is a lot better. Because they will be able to probably get 150, 160, 170 per night. That's what I think they will be charging. That's all I'm saying. So that's why you do it. All right, Riddell Cabezas. So here's the thing with this. He's in pre-construction. So the fact that they don't have a hotel in place even right now, after all these years, there's no way to know what you can't figure out how much you're going to make. See, that's the thing. You can't figure it out. All right. That's the problem. You don't know. You don't know if these guys are going to come in and say, well, we're only going to give you 50% of the rent, whatever it rents for the, let's call it a week. You don't know if that's not going to include HOAs right now. So if they do the worst case scenario where you're paying 35%, paying your HOAs, then you're going to be out like 40% to 45% easily. 50%. You're going to be in that ballpark. So even though he bought it the right price, let me ask this. Since we have Riddell Cabezas here, when they were going to have the hotel, that was one thing. But then they changed it into Palmeiras, and I believe that it was just going to be like little condos. So I thought it was like little small condos, whether they're one bedrooms or whatever size they are. I thought people could live there. I thought that would be kind of cool. There's a pool right out back, overlooks the pool and the lagoon. I was like, hell, that's going to be worth $100 per night plus. So if you can manage it and you get $140 per night, you're going to be sitting pretty. Well, if you managed it, because you could say, 25% management fee, and then you have the renter pay for the electrical, and then you got HOAs at, if it's $360, $70. I mean, that would be a win-win. And heaven forbid if you're able to get to the 150 to 170 range, because now you're going to be at over 10% for sure annually. And that's where you go when you buy this inexpensively. And that's why I always said for the last 4 years, you have to buy now. Just like when I say, look down below in the description box, see there are some places that you can still buy, like Seven Palms. They have units across the street from the second man-made beach inside Vista Cana. Sure, they look at the backyard, as they call it. Not much of a view, whether it's a pool view or just the back parking lot, but $119 for a one-bedroom. Now, what they started doing there is not fully furnished and no appliances. So now that's the difference. They're just like, yeah, 119, cool. One bedroom, 55 square meters. We're good. In Vista Cana, do you think you can get 150 a night inside Vista Cana across the street from the beach? I do. But are we going to be able to get 50% annual occupancy rate? That's the gazillion-dollar question to make it worthwhile. $2,000 per month. Give up 30% of it, down to 14. That's not bad. You get into the 160, 16K. You didn't buy it for 160. You bought it for 120 plus, let's call it another 10 to 15 in furnitures and all that. So, you know, you're going to be good. You'll be in there. All right. I won't go any further into this because, of course, we have to talk about the AI stock on fire after they dropped 20%, 25%. They all of a sudden skyrocketed in less than 24 hours, up 20%. How beautiful is that? Did you take advantage, ladies and gentlemen? The financial survival starts now. You're going to have to take these risks and advantages. Eric, here we go. Does the occupancy normally increase in a condo hotel if it's a big chain? No. No, it doesn't. It doesn't really matter about that so much. It really matters about what amenities you have there to offer people versus them staying there and leaving. That's what it really matters. Because there comes a time where you have to deal with the reality of the situation. If you have a condo hotel, let's just say at the beach, and at the beach, let's just say all they have is a pool because they built your Palmeiras. Let's say there's a fitness room. Let's say there's the lagoon, and that's it, right? And then they come and say, hey, we have a trolley ride out to one of the beach clubs. But see, if you do that, then you're going to pay for the ride to the beach club, $2-3, whatever, per person. Then when you get to the beach club, you have a fee, a consumption fee, like $30, $25, $30, $35, depending on the beach club. And just to come in, and whether you eat or drink or do anything, the 35 is gone. It's a consumption fee, so you better eat and drink at least $35 worth of stuff or $30 worth of stuff. So no, if here's the times, I'll put it this way. Let's get the names right. Upscale luxury is what you need to understand when you buy something. Marriott, Sheraton, Hilton, Wyndham. Out of that group, Wyndham I call my lowest one on the totem pole. All right. Not that I have a problem with them, which I do, but that has nothing to do with it because you can look online their properties. You'll see for yourself what the reviews are for the majority of their properties. So those are name brands people know. Depending on where they are located, if a Marriott, a Hilton, a Hyatt, or anybody else is on the ocean, that name matters. But if we're talking about it's on downtown in the middle of the city and what we have is a lagoon, a pool, a fitness room, and a restaurant, and we're downtown, I don't know how much cachet that has. because you don't have any amenities there other than those that I just mentioned. So doesn't matter the name. Oh, well, I shouldn't say it doesn't matter. It does matter. I'd rather have any one of those names than a no name. Like in Vegas, Platinum Hotel is a condo hotel, right? And it's not on the strip. So clearly those cost less than the ones on the strip. So again, don't worry about the chain name, but it better be a good name. And upscale luxury, let's get into it. Hyatt, Margaritaville, even. All right. Nobu. These are the names you really want. If you have those names, you charge more. People stay there and spend more. It does not matter if it's better. They will spend more because of those names. You could say rooms are $500 per night. People say, I'm staying there. All right. That's how simple this is. That name matters. Just saying. All right. So, but you have to be in the upscale category. Regular old category, that's, that's nothing. AC Hotel by Marriott. Okay, $134 to $180 to $200 per night. Nice rooms, nice everything. Everything's cozy, nice, and near San Juan Plaza. It's good. But that's all it's going to be worth. I don't anticipate them being able to charge $300 per night in 2 or 3 years. I'd be shocked. I'd be really shocked. But that's not a condo hotel, though. That's an actual hotel, but it might as well could be. Paul Castillo, welcome to the SSN Nation Wealthy Wednesday night live stream with that icon next to your name, which I greatly appreciate. Another real estate investor in the house. Good evening, SSN Nation family. Good evening to you, man. Very nice to see you. Eric, is COL considered a condo hotel? I'm not too sure. Well, they have the tendencies. So here's the question, Paul Castillo. You own it, COL. Cruise on Land. Did you buy with the furniture package or without the furniture package? The people that bought the furniture package, that's a condo hotel. Why do I say that? Because you can't stay in your unit. I think, 30 days? So you have a limit. And if your unit's not available, they'll put you in a light unit. So that means it's a condo hotel. And you can't rent yourself. Condo hotel. Meanwhile, Paul Castillo might have bought the unit that is not furnished. That unit, actually, he can rent himself, allegedly. That gives him more flexibility. That means he can actually live in it if he wants. He doesn't have that 30-day rule. And that means he can get his own company to do the management, which some company might say 20%, might do 25%, instead of whatever Cruise on Land management fees are going to be. That gives you a little flexibility. So over there, what they did was they changed it to where all furnished unit, they did like unit, I think it's number 1 building is fully furnished, number 2 is unfurnished, number 3 is fully furnished, number 4, or the opposite of that. But that's what they're doing over there. And their plan is all the furnished units is going to be a condo hotel. So that's how they're doing it. Raydell Cabezas from Victor Morel. The good news is that a big chain hotel will have a stronger and more robust platforms with incredible reach that comes more marketing dollars. Your property to market worldwide. Exactly. He's exactly right. But again, I'm a stickler. So Oasis Lake having a name like Wyndham, to me, I'm like, what are you doing? Hilton, Marriott, Hyatt, much better. I'd rather have that name on the branding board than a Wyndham. I'm just saying, because that gives a little more connotation of a higher value. So again, that has a lot to play into this when you're buying these condo hotels, big time. I bought a 2-bedroom at COL with the furniture package. Yeah, and it's going to be, what did you tell me? Was it 160, 180? I can't remember how much it was. Was it 167, something like that? Here's the thing. Cruise on Land is a mega project. Whatever happens in 3 years, they might have their man-made beach. They might have their water park. They might have their casino. I mean, you're not leaving if you stay there. So there's value in that. You actually have buggy rides, things that people pay $50, $60, $70, $100 per person to go use. You actually have it at your disposal. You have a water park that people pay $100 per person to get into at your disposal. So again, what is that value? To me, he has a 2-bedroom condo. I'm thinking sleep 6, sleep 4, does not matter. I'm thinking they better be charging like $250 a night with all those amenities, recording studios, and all kind of things that they have out there. Over 100 attractions, sitting over water of a pool and a lounger. I mean, they got cool stuff going on. Mini marts, you don't have to leave. Shopping area, don't have to leave. Man-made beach that's sand, volleyball court. I mean, come on, sports complex. I mean, there's a lot of stuff. I can keep going on and on. Why buying those properties for under $200,000 is a steal? Only though if you don't buy the condo hotel portion, and then it turns into a nightmare because it's not really a nightmare. I just call it a nightmare because I don't like restrictions on what I can charge somebody. And that's where the plus or minus 10% at Cruise on Land comes into play. And that's why I call that messed up. Because if I didn't get my place furnished by Cruise on Land, I furnished it myself, knowing what Cruise on Land has. Just generic kind of looking places that are just standard nice. I'm going overboard. So everybody's going to want to rent my place, but it's not going to be more valuable to me if I can only charge, let's say they charge $250, and now all I can do is charge 10% more, $275. But I spent significantly more money on getting my spot furnished and the way it looks and have the high reviews. Why am I being penalized? I want to charge $300 and something per night. See, that's what I'm saying. So they lock you in. So do you really own it or not? And those situations is why Cruise on Land is a different animal altogether, because they're restricting what you can rent it for, even though you're not in the rental pool. And they use the pool. It's a rental pool if you're in the rental pool there. So that's another thing. If you have 50, again, I use this in my example. If you had 60% occupancy, let's say this week, and the other 40% of the units were not rented out, and we're in a shared pool, that's a significant amount of money is going to be siphoned off going to the people who did not rent at night because their units weren't used. The rental pool thing is a whole nother animal that makes it even crazier, because again, you make $100,000, or shall I say, we'll say grossed $100,000, and you're going to say net, we have $60,000 for the 60 units. And then you're like, well, the $60,000 is actually for the 100 units. That's a big difference in profitability. It drops. So those are some of the reasons why I had to make the video, because people don't understand getting your 4 or 5%. And then if you're in a pool, that makes it like you can't get out of the matrix, because you're always going to be down unless, I mean, so what if they rent things 100% for a few weeks during the year, 10 times or 12 times during the year? So what? The other times we're sharing with the freaking 40% that's not rented. Think about it. I haven't done any calculations on this yet, but using the example that I used, 60,000 divided by 60, that's $1,000. All right. That's what we have in profit. But soon as we do this, 60,000, and we're in a pool and we go to the 100 units in the pool, everybody shares 600. That's a huge difference. That's $400 difference. Do you want 1,000? Do you want 600? Now, at Cruise on Land, in a lot of places, you're going to be in this pool thing. And if you're in a place where it's 60% rental rate, or even worse, 50% of the units aren't being rented out, well, man, I'll use the same thing here. That's $5 grand. Sorry, hold on a second. I'll use this here. What is that? 60,000 divided by 50%, right? What did I messed up my calculations. Oh, I was using 1 week. I won't even be able to figure it out right now. I done messed up my calculations. But all I'm trying to say is if it's 50%, 40%, 30% occupancy, man, you're sharing all of that little bit of profits with everybody. So here we go. All right. So he has a 2-bedroom. Oh, I was thinking you had the 2-bedroom penthouse unit. You have a regular 2-bedroom. And how can I forget? It was 126. I should have remembered that because I actually knew that number. But I was thinking of George's unit because his penthouse unit was 126 for the penthouse. So I was like, nah, it can't be 126. That's George's unit. So 126 for the 2-bedroom, the regular 2-bedroom, not the penthouse. Prices have risen. That used to be what, 102, 110, 108, something like that. It went up a little bit. Cruise on land prices are going up slowly. And they should. Because until you figure out what they actually are for you, you should proceed with caution. Because you don't know what they're out there really doing. Like I said, it looks like they're doing condo, hotel, timeshare type stuff. So it's weird. All right. Let's see. I'm going to wrap this up, ladies and gentlemen. I don't want to be here all night. I have some things to do. My daughter is coming to town tomorrow. So that'll be awesome. One of my beautiful daughters will be here. And by the way, all of them smart, great personalities, beautiful. Total package. I'm just saying. I'm just saying. It's not like I'm going to marry them off or anything. They get their own choice. But hey, some of you guys missed out on some great women. I'm just saying. I'm proud of my daughters. They're excellent human beings to boot. All right. We're going to wrap this up, ladies and gentlemen, unless you have something else that you want to mention. Again, rate cuts coming in September. Are you preparing yourself right now? Financial survival has already started. Are you buying the dividend stocks, the ORCs? And I'm going to wrap this up, but let me just go look at something. ORC stock is, I'm going to go look at this. $8. It's at 17.91%. And yeah, it shot up after hours, just like everything else. It went from $8 and something, $8.11 to $8.12. Okay, it didn't shot. It looked like it shot up on the graph, but that's not the point. 17.91% dividend rate. That's the point. In fact, they have AGNC over here. This should probably be around 14, 15%. 14.39% for AGNC. Realty Income Corp. I'm not a ANLY. How could I forget? Or NLY, sorry. NLY. 13.06%. Look at what happened after hours. Look at it went up a little bit, right? Because about the rate. They know it's coming. 2, this is what I mentioned on Monday, TWO. 13.36%. These are real estate investment trust. Why is this a thing? Because whatever you put in now, you will have a return of this rate at $13.47 for 2 TWO. When they reduce the interest rates, these guys can go and borrow and do all kind of crazy. So this stock price could actually go up. And if the stock price goes up, your yield that you buy at later, because let's just say you buy at $15, your yield is going to go down. So that's why you want to buy now. So you always get the 13.36 and let it reinvest itself. All right. There was an EPR on here too. Let me go show EPR. Let's go EPR stock. Let's see what they're doing these days. Oh, a little drop, and it's only 7.6. Not good. Realty Income Corp, down with the big O. They're going down. Again, not recommended, 5.5. Some of these you're going to have to do your own homework. EPR and O, I've talked about O before only because it's one of the largest in the country, but your rate of return, unnecessary. stick with the other ones. ARR. Here we go. Look at this. 14.26%. See, you guys are sitting out here like, what the heck? Here's my prospect capital. Oh, this is going to be in the 15% range. 15 point, no, what is that? Nope, wrong. 13.24%. Again, double digits. I wonder if this is, no, it's not. That's not Jeppy. Well, let's just go see what Jeppy's do. Well, they don't even tell us right now. Hold on a second. Okay, that's going to be 9% because it's under 53. So it has to be 9. Yeah, that's 9%. JEPQ. Let's see what they have. 53. So it's all a little higher. So it's almost going to be at 10%. JEPQ. It's going to be 9.5 to 10%. So is that good for you? Then why not jump on the bandwagon? Then we can go to VOO, which is a Vanguard group. VOOG. There you go. I'm just saying. Let's see. Victor Marrero. Uh-oh. Somebody asked how old my daughters are. In their 30s. Just saying. 30, 31, 35. That's it. 30, 31, 35. Prime time. Only one is married, actually. How old are your daughters? Eric, will you be able to borrow against my property if it's a condo hotel? Riddell Cabezas. See, you just asked the magic question. That's what I haven't talked to the guys at the lender, but you need to call one of the banks in town. If you have to finance it, you need to know this answer. I don't know when that Palmaris is going to be done because it's not going to be done anytime soon. So you're going to have a year and a half, 2 years. Over that time, I suspect they would do it, but I would still ask because they're going to say it's not primary. Is this really a vacation property? I don't know what they classify these as. So you might want to start checking. And in fact, well, I can't check right. Well, no, I can check. I'm going to check tomorrow. I'll check with, well, I hate checking with Banco Lopez de Haro because they have some of the worst lending products. But I'll still check. Let me see if I can get Scotiabank too and see what type of loan programs they have if you have a condo hotel, if it's designated a condo hotel, is there some sort of restrictions? Because we need to know that, right? Everybody here needs to know that because all these projects are starting out as condos that you think they're selling like Chuckham inside Vistacana. I thought it was like a 1-bedroom or studio unit that they were selling across the street from the man-made beach. And then all of a sudden I started seeing Chuckham condo hotel. I was like, whoa, wait a minute. I don't want to hear nothing about condo hotel because the price was pretty good. But a condo hotel changes your whole scheme. You're going to get I don't know about a lesser return. I'm guessing a lesser return, but YMAG 46.89%. That's insane, says Paul Castillo. That's at YieldMax ETFs that I started off the hour with, ladies and gentlemen. YieldMaxETFs.com. You can go see YMAG, YMAX, APLY, AMZ, AMLY, TSLY. That's the Teslas, that's the Googles, that's the Amazons, that's the Apples. And then they do high risk, high rewards, options trading, then some treasuries. And basically, the more people buy and the price increase goes up, that's the only way you get appreciation. But if you can get 30, 40, 50% return on your money, you're hoping that baby rides. And after they start, well, right now, in fact, it's going to ride because the interest rates are all going to go down and they're already built in. So that means not only are you going to get the appreciation that you could potentially be getting this 46% distribution, which is like the return rate. I mean, double your money. Talk about doubling your money every like 7 to 10 months. That would be crazy, right? For life, if they have it that long, which potentially they can do it. Why? Because they set themselves up beautifully. The Federal Reserve did option number 2 by raising the rates to 5 to 5.5, then letting it hold for a year. So then they can come out and claim, hey, inflation went down, let's go. When in fact, nothing changed. You still have money in the market. You still have the wealthy with money. And as soon as they reduce the interest rate, they're off to the races. Officially, it's off to the races already. But hey, I'm just saying, you got to get in the game. I keep saying this. I'm going to say it on Friday too. You got to get in the game, ladies and gentlemen. All right. If you have anything else that you want to say, please do so now. Make sure you smash that like button, everybody. Period. Torres, nice to see you. Make sure the chat room on YouTube. If you can't get in the chat room, that's because you have to be a member of the channel. But you can click on the links in the chat room and therefore see the WhatsApp. Join our WhatsApp group. And if you join and you don't see anything, that's because these guys, WhatsApp doesn't allow you to see all the threads. It just starts when you show up. So if somebody posts something and you're like, what's that? It's because there's a previous conversation that's been going on. Just so you know. All right, let's go. Victor Morrell says lots of goodies out there. Did you know Robinhood is paying 1% back on any deposits? No, I didn't. So Robinhood Webull, thank you for mentioning that. Get your free share of stock and 1% return on any deposits. Okay. The link is down below for Robinhood and Webull. Get your free shares of stock from both of those companies. Plus, it earns 5% interest rate. They also have the 3% cash back when you can transfer points to invest. I'm going to have to go look at this. 1% back on deposits, plus it earns 5% interest rate for any cash that's sitting in your account. Okay. That's see, perfect example. You could actually have your account at Robinhood earning 5%. So why would I have a condo hotel earning 5%? And I'm still liquid. I mean, seriously. And even why take 5% when I've showed you several real estate investment trusts that are over 13 to 17, almost 18%. What I didn't show you was, here goes one more, one of my favorites. It's one of my favorites because I diversified. That's why it's one of my favorites. 22.66%. Unbelievable. High risk, high rewards. It's an icon group, but it's weird. They have energy. They have automotive, food packaging, metals, real estate, home fashion. It's a group, but yet the stock price keeps going down. The dividend yield keeps staying this high at 20. Do you know what 22% is? We'll go to YieldMax ETFs where it's 35% or 50% or 60%. Crazy. Remember, do your own due diligence, do your own research. Make sure you are doing something that you love. I'm going to add in this USA Compression Partners just for giggles and grins because, see, you want simply 9%. You could do these guys. USA, USAC. Seriously. All right. Austin, Texas. How crazy is that? Want to see something else crazy? Let's just go with what we talked about before. ET. 7.87%. So if you want to stay in that range, you have plenty of options. But if you really want to make your stock portfolio blow up, then you should be at a higher return. All right. And let me see about MPLX. Can't remember. 7.94. Marathon Oil, is it 5% still or so? 1.57. Okay, so that's nothing. Occidental, let's see what they do. 1.45, nothing major. Chevron, 3%, 2%. Let's see. 4% dividend yield. Although those are, after you know the other ones, you start being like, well, why am I going to do 4%? When I know there's stuff out here that's 15, 13, 12, 10. So why would I do that? It doesn't make much sense, right? Although this is a very stable company, but still, there's a lot of stable companies. You can earn more. All right, ladies and gentlemen, hopefully that helps you out. You had your pen pads and papers ready. Hopefully. Coinbase is also paying 5.25% interest rate for keeping USDC backed by the dollar. Here's my strategy. The USDC, I have a Coinbase generating 5.25, which transfer to Robinhood to invest monthly. I like it. Using interest, to create more interest. It's a beautiful plan. I love it. Again, Victor Marrero, the retiree, is throwing down some game tonight, ladies and gentlemen. He's giving you some playbooks. I mentioned VOO, VOOG. Those are ETFs that you can go check out. Okay, SCHD, SPY, QQQQ, QQQ, only 3 Qs. There's some right there. They're Victor Marrero's favorites. So I always remember those now. I'm missing IWM, excuse me, IWMY. Hold on a second. There's somebody coming in hot. I want to offer promotion. Yes, thank you so much. I don't do promotions. I appreciate that, though. Where was I going with this? Victor Marrero. Oh, IWMY. Where are we at? Here we go. All right. IWMY. Dividend, $13.63 stock. Whoa, we have nothing. What's happening? IWMY. Am I missing something here? Yeah, I guess I am. I guess I'll just have to go here. Here you go. Distribution rate, 73%. That's crazy, ladies and gentlemen. That's their distribution. How are they holding on to money? High risk, high rewards. That's all I can say. We just added another one. IWMY, that's Mr. Dividends, one of his favorites. And Victor Marrero's as well. So keep that in mind. All right. Hopefully that helps you out on this Wealthy Wednesday night live stream. Added a few that I haven't talked about in a while. 13, 14, 15, 17, 22%. Then we go ballistic with yieldmaxetfs.com. You're here. Your financial survival starts now. Ready, set, go. Start studying. Don't put yourself down for having to learn or study. You don't have to jump in. Make sure you feel comfortable, but you have to invest. All right. I had a conversation with Mo earlier, and I just so happened I had to go look at some information, and I found out that the Gen Zs on average make around $70,000 per annum every year. So that's like 6,000, a little under 6,000 per month. Now, I don't know if that's after tax or not, because if it's before tax, wow, then you're going to be closer to 60 G's than 70. And now you're down into the 5,000s. And now you can't buy or hardly rent anywhere that's going to be worthwhile. So this is where we're heading. You got 3 years, ladies and gentlemen. That's it. You have to start now, though, because in 2 years, it gets tougher. So after 3, though, it's going to be set in stone. The haves are going to have, the nots are not going to have, and we're going to be in a wild situation. All right, here we go. Victor Marrero, thank you so much for this help, this assist. IWMY just announced their dividend payment went up from 69 cents to 88 cents. I tell others, especially the younger generation, you have to get in the investment game or you won't make it. Exactly. If you're young and watching this, you need to be in the investment game under all costs. In fact, let's just play this game a little differently. It's everybody. Think about this. You're 50, 55, even 60. And you sit there and you say, you know what? I have X amount of dollars, but what am I going to do? Right? What am I going to do? Well, you're going to have to figure out a way where some of that X amount of dollars is generating maybe 2,000, 3,000, 4,000 per month. It's possible right now. Once the stock prices go up, the yields are going to drop. You're not going to be able to get 13, 14, 17, 18, 20% return. Not on that money. Whatever you invest when the stock price goes up another 20 to 30%, and you're down to, instead of 13%, you're down to 8% and 7%, and inflation is 6 or 7%, you're going to be in a world of hurt. All right? This is very serious, ladies and gentlemen. The fruition, everybody 5 years ago thought I was off my rocker when I said the middle class is going to be wiped out in 5 years. I'm not off my rocker. I'm going to tell you again, the upper middle class and lower middle classes, and everybody's going to be wiped out except for the top 10%. That means 90% of people will be living paycheck to paycheck in the United States. Is there something that's going to change? No, we live in a capitalist system. Nothing's going to change. Everything is skewed toward being rich and powerful. And so therefore, they're the ones that own the corporations, have the assets that you should be buying yourself. You have to get in the game. Otherwise, you're going to find yourself like the Roman Empire, the have and have nots, and you're going to have rebellions on both sides of the fence. The haves are going to try and keep what they have. The have nots are going to run all over the haves. And the civilization, because you can't give any taxes for your military, taxes to support your infrastructure, nobody has the money. So there's going to be a problem. You live in a third world country, you just don't know it yet. That's why some of us said, let's get some property, real estate outside of the United States purview. Meaning, you may not have a passport to that country. You may not even have residency to that country. But a lot of countries give an exception for visas, residency, if you own real estate. You're a contributor to their country. So that's why I say buy something that's going to be near where you can get on a boat and get to. Forget the planes, unless you can do private, because otherwise you got to go through security and all that, and they can shut down your passport. I'm just saying, be like the plebes under the Roman Empire, where they just walked off from the city. That's everybody that has a job and everything. That's their Labor Day. They go out, and all the rich people or wealthy people have to fend for themselves for the week, because then they see how valuable you really are when they actually have to do everything, right? They don't get the life of luxury from people doing hard work. So you need to be hard working at getting your investment game up to speed. We gave you a start because you can start with just dividends. It's hard to get 10, 15% returns. But if somebody's handing it to you on a silver platter, these dividend stocks, then why? You don't have to invent anything. You just sit there and say, thank you so much. Or if you want to get those ETFs like the QQQ or the SPY, SCHDs that go off of the stock market, well, if you get 9 or 10%, meaning the stock price goes up 9 or 10%, because those are stock symbols as well, okay, fine. That's still 9, 10% annually. I'd rather have that you didn't have to work for. All right, that's enough. I'll see you on Friday night when it's the SSN Nation Friday night live stream. I'd greatly appreciate if you come back, and we'll be on multiple platforms. And once again, I love you guys very much. And you know, anything you need, you can always make a comment in the chat rooms. Under videos, you can make comments. You can come see us at our WhatsApp chat. You can send me an email at support@stopstrugglingnow.com. All of that. And with all that said, ladies and gentlemen, make sure you stay safe out here. It's a wild, wild world. And with all that said, keep your head up, keep moving, and I'm out.